Hey guys, it is Patrick. Before you get started with understanding debits and credits as well as how to do journal entries, I wanted you to know that if you go to my website at www.patrickleemsa.com, you're going to find links to all 8 lessons in this series. So if you get turned around or you don't know what the next lesson is or how to get to there, you can definitely go to my website, click on the next lesson, and it'll take you right back here to YouTube where you can view the entire lesson. Also, in the description section below, I've put a link to where you can purchase the notes for this series so that you can just sit back, learn more about debits and credits and doing your journal entries, and you've got the notes right in front of you to follow along. So head to my website at www.patrickleemsa.com to purchase those notes, as well as see all the links for this next 8 lessons in this Understanding Debits and Credits and Journal Entry series. Until then, let's get going with your lesson. All right, in this lesson, we're going to walk you through the framework of journal entries. So in the last few lessons, we've been talking about debits and credits and how those debits and credits interact with the expanded accounting equation. And at the end of the day, what we're trying to do as accountants is to actually do journal entries, because this is how we take an economic event, organize it in a manner that the accounting information system will accept it, so that we can actually manipulate that data to create information so that external users can, or really any users, internal or external users, can use that information to make decisions for the organization. So this is a mechanical process that we use to translate the economic event from what it is to readable data that we as accountants can then manipulate and use to help everybody in the organization make better decisions for the organization to progress them forward. So in this lesson, we're going to be talking about the framework of journal entries. So let's get started here about understanding our language. So in accounting, accountants use journal entries to actually book an economic event into the accounting information system. It's how we start to organize the books of the company. So it's not like we take receipts and then, organize the receipts in a way that we just, add them on Excel and then we're done. No, we've got a process, and this is the process that we use to actually organize them into the accounting information system. Think of this as the way that we fill out a form when we need to submit our personal information to the stores. So just like if you were to enroll in a store's rebate program or rewards program, you'll have to fill out some document or give them your phone number or do something to enroll yourself. Well, think of that. That's what we do every single day. We are taking that information and filling out a form, in the case journal entries, so that we can actually organize that data and do something with that data. For the store, it's to provide you offers that will help you spend more money, right? So they need that data so that they can be able to do that. That's why they want your phone number anyway, so they can track everything that you purchase. And then once they have that, they'll send you very direct targeted coupons for things that you already buy, but that you need to buy more to get the discount. You get what I get. All right. So this is the mechanics that we do it. So what does it look like? Well, this is basically the framework or the mechanics of how we do a journal entry. So the journal entry starts with a layout. This is the layout of a journal entry. Literally, it's 6 boxes. Now, we can actually expand these 6 boxes, but at a minimum, you're going to have 6 boxes per se in the layout of a journal entry. Now, there is an organization to these 6 boxes. The first one is the first column. So the first column is where we are going to report or write the account name. So if we were dealing with cash, accounts receivable, equipment, whatever the account that we're going to be dealing with based on the economic event, we're going to book it. We're going to write the account name in that first column. Okay. Then what we're going to do here is that we are going to write any debit amounts in the debit column. So I talked a little bit in the last lesson that, if we're going to debit an account, it would be on the left side. That's where this is right here on the journal entry. So if we debit cash for $500, we're going to put that $500 on this debit side, $500, okay? Which means if we're going to debit cash, we're not going to credit cash. So we're going to leave this blank. Okay, I'm going to scribble it, but we leave it blank. Okay, so we really don't need 6 boxes. We only need 4 boxes at the end of the day, but this is how we organize all of our information. Then we might say you're going to credit, I don't know, debit cash, so credit sales revenues, okay? So I'm going to credit sales revenues. I'm going to put that on the very next line after all of my debits. So I might put sales revenues here, and it's going to go not in the debit column, but it's going to go in the credit column, okay? So every transaction, every journal entry is going to have a debit and a credit. We'll talk more about that here in a second, but that's the framework or the layout of journal entries. So I said cash, so cash would be here. So this is generally what the layout is going to look like for a journal entry. Debit means left, credit means right. That's all that it means, okay? So let's talk about some of the rules for writing journal entries as we get prepared to look over some journal entries in lessons 7 and 8. So first rule here, all complete entries must have at least 1 debit and 1 credit. So all completed journal entries must have 1 debit and 1 credit. This does mean that you could have multiple debits and 1 credit, or you could have multiple credits and 1 debit. As long as you have at least 1 debit and 1 credit, you can do whatever you want. I've heard of situations where a company might have 500 lines. They might have 500 debit or 499 debits and 1 credit. Why might that be the case? Well, maybe they're trying to take some type of cash or revenues and actually allocate it to different departments who gets quoted for those revenues. So just understand that we can have as many debits as we want, as many credits as we want, but we must have at least 1 debit and 1 credit. So you may have more than 1 debit and or 1 credit, but you must have at least 1 of each. If you don't have 1 of each, you've done the journal entry incorrectly. Now, all completed journal entries must have all debits equals all credits. We're talking about dollar amounts here, not entries. So I can have 500 debit and 1 credit as long as the sum of all debits equals the sum of credits. Okay, so if I debit 500 times these 500 different accounts and it totals $5,000, then that 1 credit must be, what did I just say, $5,000? Let's just say it's $5,000, okay? Sometimes my mouth goes faster than my brain sometimes, so I don't remember what I said. But all of my debits must equal all of my credits in dollar amounts, not the number of debits and credits I have. Now, debits always go first. So when we talk about those 6 lines, debits always first, credits always last. Now, there is a caveat here. Computer systems are smart when it comes to accounting. They might be okay with having credit goes first and debit goes last, but generally speaking, debits always go first, credits always go last. Okay, so debit first, credits last. So debit should be the first line, credit should be the second line, assuming you only have 1 debit and 1 credit. In a traditional sense, we always indent credit account names. So if you notice when I did the credit on that fake journal entry, I gave it a little bit of space. We always indent credit just to make sure that our colleagues know that we meant a credit and not a debit. So always indent your credit names. Now, at an introductory level, revenues, expenses, and dividends always increase. And I say this as an introductory level, revenues, expenses, and dividends always increases. It might not be true in real life because there are situations that we might have to decrease one of these 3 components, but a vast majority of the entries is always going to be increasing. So when we think about debits and credits, the expanded accounting equation, and a journal entry that we have to do, we can almost be assured that revenues, expenses, and dividends will always go up, increase. Now, when we analyze an economic event and the debits and credits, we can follow these steps. So when we talk about how do we do journal entries, these are the 6 steps you want to follow at the very beginning. When you get good at this, you're going to be doing all of these so quick in your head that you won't even do step 1, 2, 3, 4, 5, 6. You'll just do them. So when you're first starting to learn how to do journal entries, follow these 6 steps. And then when you get better and better and better, you don't even need these 6 steps. You can just do them. So step number 1 here is you want to identify whether the item meets the definition of an economic event. There are transactions that happens with a business that for whatever reason, GAAP says it's not a valid economic event. And if it's not a valid economic event, we don't put it into the books. For instance, if your company promises to buy X amount of things from another company, you guys might have a legal transaction there, a legal promise that must be completed. Otherwise, there's a termination fee. But in the accounting world, nothing was exchanged. Nothing happened. And if nothing happened, we don't book it into our books. So that is not an economic event. It might be a legal event, a legal transaction, but it's not an economic event. When is it an economic event? It's an economic event when we maybe pay a deposit. That deposit is an economic event. Or we receive the goods that we purchase from them. That would be an economic event. Or we pay for those goods after we receive them or even before we receive them. That would be an economic event. So if nothing exchanges, if it's just a promise that exchange, it's not an economic event. So that's step number 1. Is it an economic event that actually changes the basic accounting equation? Step number 2, identify the accounts to which the economic event affects. So once we go, okay, this is an economic event. The next question that we need to ask ourselves, okay, which accounts is this economic event going to impact? And it's going to impact at least 2 accounts. Why 2 accounts? Because journal entries have a debit and a credit. We call that double entry accounting. So when we do journal entries, we always have a debit and we always have at least 1 credit. And because of that, when we do step 2, we are always impacting at least 2 accounts. We might be impacting more, but at least 2. Step number 3 here, identify which components of the accounting equation the transaction affects. So now that we know what accounts, what's the associated component? So if we are going to impact cash and sales revenue, we know that we are going to impact an asset and a revenue account because cash is an asset, sales revenue is a revenue. So understanding which components are going to be impacted based on the accounts you chose in step number 2. Then in step number 4, identify by how much the assets are being affected. So we're going to look at the transaction and go, okay, what's the dollar amount that's being affected? And most of the time, it's super easy. Other times, it takes a little bit of work. For instance, if you go out and buy a car and you pay a little bit in cash and you take out debt for the other part, then you're going to not impact 2 accounts, you're going to impact 3 accounts. You're going to impact the car, which is an asset. You're going to impact cash, which is an asset, but it's going to decrease. And then you're going to impact a liability because you're going to owe. So in that case, we have 3, but now we got to figure out how much goes to each one of those. Oftentimes it's 2, and then it's easy. Whatever that transaction's for, it's going to go here and here, okay? Once we've done number 4, then in step number 5, we're going to ask ourselves, does the account increase or decrease by the amount that we found in step number 4? So all we're simply asking ourselves, did the account increase or did the account decrease based on that economic event? So if I bought a car, some cash, some debt, I can think about those 3 accounts. The car goes up, right? Because I have more car. So the car account will go up. Cash went down because I had to pay it. So cash goes down. And then the liability, I have more liability. I'm going to have to pay back in some time in the future. That goes up. So I have up, down, up when we talk about those 3 accounts. Then the last thing is now that we have all the information that we need in step number 2, 3, 4, and 5, we're going to apply that to the key that we learned in the last lesson when we said that we have dealer. And then if one side goes up, debit. If it goes down, credit. If the other side goes up, credit. If it goes down, debit. We're going to apply that to everything that we did in steps 2, 3, 4, and 5. So that is our framework for solving a journal entry. So that is what we do when it comes to solving a journal entry or preparing a journal entry. Now, walking you through this is important, but some of you are visual learners. So in the next 2 lessons, we've got 14 transactions that I'm going to walk you through the debits and credits and the steps that we talked about here in this framework. So until then, we'll see you in the next video. Hey guys, thanks for watching this lesson. Don't forget to subscribe to my YouTube channel by clicking over here. And for more accounting content, make sure you head to my website at www.patrickleemsa.com or clicking over there. And for the next lesson, just click right over here. Until next time, we'll see you in the next video.